Williams, also known as Diamond Dave, the founder of the highest paid part-time job in the world options training program. And what we're going to do is we're going to really quickly break down Toyota Motors. We're going to break down some timely news about them. And I'm going to kind of show you some opportunities to trade or not trade this particular company using options trades, or maybe even short selling the stock, kind of based on what particular side you fall into, based on what we see on the chart, what we think is going on from a current event standpoint, and really give you some of the risk associated with this particular play. So let's go ahead and get into it. So looking at Toyota Motors, what we're looking at, let's go to the yearly chart. We're looking at the yearly chart, and what we're seeing is that we're seeing a really, over the past few days, a big breakdown from, like, say, this 180 at one time was really kind of like a support level. And we're kind of seeing it break down from this 180 support level. Maybe if you said it was around this 175, it broke down up under that, right? So we're looking at the daily chart, and we're seeing this here. Now, what we're seeing is Toyota kind of topped out around the 185. It broke down again. And what we're seeing a lot of gaps, even though this gap right here got filled coming back up. Hit around this 185, broke down really hard, gap back up again, had some consolidation, hit this 185 again, sold off, and then started to really break down really hard up under, let's say, the 180 or maybe even the 175, in that particular range of support. And we want to ask ourselves, do we think this is going to continue to fall back down around to maybe this 150, right? Here, and then maybe consolidate again like it was doing here? Or do we think maybe we may get some consolidation between, like, maybe the 160, 164 or the 164 or 170? Let's look at this also on the weekly. And what we have is pretty much a red week over the past week, which is that 816. We have pretty much a red week here off of some consolidation around the 180 and then a big sell-off we talked about before. So let's go back to the daily chart. Now, there is some news, we know, let's talk about the car space. The car space, we're dealing with a chip shortage. The way they make cars now is pretty much, the cars are pretty much controlled by chips. So with the chip shortage as the result of the shutdown in production because of the pandemic, what we now have is a chip shortage. And one of the reasons we do have a chip shortage is because to make production and also to make delivery more efficient, what a lot of businesses have implemented is what we call like just-in-time production, and sometimes also just-in-time delivery, which kind of means that we don't produce anything until we feel that there's an actual need for it, and we make our production so efficient, we don't carry a lot of surplus. So you'll see this from an example of, like, if you ever gone with, there's a Amazon subsidiary called CrateSpace. CrateSpace is an on-demand book publisher. So what you do is that somebody puts the order in, and what CrateSpace does is, because they have, essentially everything templated, everything is computerized, they can make your book in a relatively short amount of time and then get that book out to that particular buyer. So, and what I mean a relatively short amount of time is they can do it in 2 weeks. Now, you may say 2 weeks is a long time. It's not a long time to make the book and get it out, right? Compared to having to produce 10,000 books, put them somewhere, pay to have them sitting up somewhere because you got to pay for storage space, and then now sell them as the particular orders come in. So what a lot of businesses are doing is they realize it's more efficient to produce things when an actual order comes in. We've figured out how to make production very, very efficient. And we don't have the particular economies of scale to where we have to produce a lot to justify production. The downside of that is that if production gets stopped, what happens is you lose your surplus, and then it's almost impossible to ramp up. So what had happened is, once the pandemic is over, you got the pent up demand in the car industry. Now you need to increase production. It's not possible. Why? Because we don't have the chips, and we don't make cars now without chips. And what I would consider doing if I was some of these companies is going old school and making cars without chips, because we know that a car can run without chips because we did it for literally almost 100 years. But now every car is controlled by chips. So if we don't have chips, we can't make cars. And there's a worldwide demand for chips. So what we're seeing is that this is one of the issues that's affecting the particular car industry pretty much across the board. So this is an industry-wide issue. Now, what Toyota did, and today is late August. So today is the 22nd of August. But what Toyota did was they came out last week and they kind of talked about, let me go to that particular article, that they're going to cut production by 40%. And one of the reasons why they're going to cut production by 40% is because they don't have the chips. right? So they're going to scale back production. Now, people think that's a positive because they have the attitude as well. If I have a demand for something and I have less of it, I can raise the price. So they're kind of thinking like a corner store operator, right? Where there's a hurricane, there's not a lot of water, so I can make a lot more money by selling water at a higher price. What you have to understand is that Toyota's a volume manufacturer. They make money on volume. So it hurts them to not have something to sell. They're not like Bugatti where they make money on really trying to sell each car and get maximum profit on each car. Toyota makes money on volume. So the way they make money is they just sell a lot. So what they try to do is because they make money on the actual volume of car, they try to make everything, all the parts, manufacturing and all the parts fulfillment be very, very efficient. So they had a particular process that was based around that. And now because of, the breakdown in manufacturing because of the pandemic, it created a backlog on chip production. And now they don't have enough chips for their cars. So what they're going to do is they're just not going to make cars. So what they claim that they're going to do is they're going to slash production by around 60 to 80% for this particular month. And as for September, they're projecting a reduction of 80,000 vehicles, but they said it's a very fluid situation. Now, one of the things they came out and said is that they don't think this is going to affect revenue. I don't see how it won't. I'm confused as how we're going to cut production by 40% for September, but it's not going to affect revenue. So I'm trying to figure out is that where's the revenue going to get picked up somewhere else over the course of the year. But that's pretty much what they're saying. So then they say they're going to reduce car production at 14 factories. And so that means global production for September will fall by 360,000 vehicles. Now compare that to Tesla, which does about 500 deliveries, 500 to 1 million deliveries over the course of a year. And you got a company like Toyota that their September production with a 40%, right, will bring down vehicle production by about $140,000 on 140,000, which means that it's going to cut global production by 360,000 vehicles just for that particular month. So compare Toyota to Tesla, where their global production is going to fall by 360 over 1 month. And you got another company that their overall yearly production for the whole year might be 500,000 to 1 million cars. And this is what I want people to understand is that you're dealing with a different scale of manufacturer where they're literally probably producing almost 1 million cars a month, right? So this is going to be one of the issues. So this is what may have caused that particular sell-off, but I'm also show you something on the chart that is very, very interesting about this particular chart. So that's their particular analysis, right? So another article, they're going to cut production by 40%, but not the new Tundra. For people that are into the big truck game, it's very hard right now in America to get a brand new full-size truck. That's one of the issues. If you want a brand new full-size truck, you got to get one now. And what we got to understand is that we're getting ready to roll into top of the year. When you're looking at car manufacturers, they normally release the new models in mid to late October, right? So we really talking about August, September, October. Talking about another 2 months, maybe 2.5 months. Normally we start seeing the 2022 models start getting released in mid to late October. So the question is, will this particular chip crunch affect releasing those new models, right? Because they want to get those new models on those dealership lots before the first of the year, and the dealers want to get those old cars off the lots around September, October to make way for the new models, the 2022s. So that's something we got to look at. But a lot of people have told me that like the big trucks, the big full-size trucks, I've heard through the grapevine it's hard to find a brand new full-size truck right now because manufacturing has been stopped to where it's hard to get those particular cars. So you may have to wait to get to 2022s. So they're going to make the Tundra, but they're going to shut production down. So here's another article, and I'll probably put this in the description so you can read it. And what Toyota had done is they already had shifted in what they call just-in-time component delivery system. And one of the reasons why they did that is because of that Fukushima earthquake. And y'all remember that happened back in the day, and the tsunami in 2011, right? So they had created a process to make sure that they could always have chips. But one of the issues is that the pandemic really, really hurt them. So they were stockpiling just in case there was an emergency. But because of lack of production, because of the pandemic, it had kind of cut into those particular stockpiles. So that's something that, it is affecting their production. And we see this. Ford had the same issue. Other companies have had the same issue. So what we want to understand is that, how do we think that's going to affect Toyota Motor stock price? Here's another article that I thought was really interesting. They call it ASEAN supply chain vulnerability. Malaysian chip processing suspension spills over the global company. So what we're talking about, if a heads up for people, Toyota to me is probably the number one car in Asia, right? Most Asians I know drive Toyotas regardless of their ethnicity. So we call Asians, we essentially put them all up under one umbrella. Even in reality, they're really different groups of people with different cultures. But one thing I've noticed in dealing with Asians as a group, that general group, they pretty much all drive Toyotas. Whether they Koreans, Japanese, Vietnamese, they're going to drive a Toyota. That car is massive in Asia, right? So they have a lot of relationships with manufacturers and suppliers in other parts of Asia. And they're worried that this particular variance from the pandemic is going to start to affect their supply chain. And then if it affects their supply chain and they can't get particular components, it will now affect their production, because they got to either try to source those in other places. They may not necessarily have the relationships to make sure they get them in, and also can raise costs. So one of the biggest issues with the pandemic is it curtailing production. You're going to get a lag in how that affects particular industries, but eventually it will affect that industry, because once they eat up that surplus that they have on hand, and we still don't have the level of production that we had before the pandemic, now we're going to start having issues. So this is what we're looking at on the chart. So what that news came out on, I think, the 19th or the 20th of last week, which is around Thursday. So in looking at that particular date, that was here. But what we've seen is that Toyota, let me zoom this in real quick. It had been selling off from the 17th. So somebody may have gotten this news early, and they already started getting out of positions, because what we see, it's not a lot of volume, right? But we start to see a breakdown. Now, this is not a heavily traded ticker. So that's something that you got to understand. It's not a heavily traded ticker. So what we call a slow mover. Its beta is under 1. It's not a big mover. But what we're seeing is that it's gapping down. So it closed at 175 here, and it opened at 170. Closed at 178. And it opened at 165, and it closed at 164, right? So what we're seeing is that it's starting to break down, and it's gapping down on the breakdown. Now, the question is, how far down is it going to drop? Now, as a trader, as an options trader, the biggest risk to this particular play is that the options chain is really thin from an open interest standpoint. So the biggest contract on the September 17th is the 307 from an open interest standpoint. We also got the 275 and the 250 that's in the money. This to me is a risky contract because you're buying out of the money. So you're not getting any intrinsic value. You're getting some theta because you're buying a contract that's almost a month out, but you're buying out of the money, and it's a thin open interest. I know people that have traded 307 open interest, but it's thin. And you see this on the bid is way under the ask. The last price is 95. It's not that bad from the ask, but the bid is way under the ask. So you'll probably get filled somewhere in between maybe 90 and $1. But the question you got to really worry about is you're buying out of the money, right? Now it may gap down on Monday, right? But you're buying, if you to buy, currently have the ability to buy it today, you're buying out of the money, and you're not buying that much theta because you're only buying around 30 days of theta, right? So that's the risk, even though these contracts people are getting into these positions, right? Another reason we know that it's thinly traded option chain because they just got monthlies. So they only have weekly contracts. Looking at the October 15th, same thing. It's not a lot of open interest on the contract, right? So people are going into this 160, right, which is right out of the money, but it's a volume. It has a movement to the open interest that'll probably happen on Monday, but we see the 252 and the 122. Okay. But those are the issues with these particular plays. Not a lot of open interest. And like I said before, as you look at the ticker, it's thinly traded. So we had a lot of trading activity on Friday. It picked up, but it's averaging around 251,000, which is really low volume on this particular ticker. Looking at the statistics, beta is way under 1. It's 0.64, which means it doesn't really move in relationship to the S&P or really the overall market. What I do like about it, and why I think it could have potential to really break down, is that if this institutional hold is correct, there's not a lot of institutional buy-in on this float, right? So without having a lot of institutional buy-in, if this number is actually correct, and I will cross-reference this number to other platforms to kind of make sure that this number is not off, because that just seems abnormally low to me, you may not have a really strong floor, right? So if institutions aren't really supporting this particular price, it could fall a lot before people really start to come in and try to buy that discount. Okay, so that's something that you want to look at. So I would cross-reference the float and also the institutional holding to other platforms, because Yahoo could be incorrect, right? But it's a slow mover, okay? And if you look at their 52-week range, we got 129 to 185. So we're still way above their 52-week low, which means we could have a lot of room to fall. And if we look at like the 2-year, this is kind of what we're seeing, right? So looking at the 2-year, this is the breakdown because of the pandemic, and this is moving up out of that breakdown, right? And you can tell, you can look at this chart by the candlesticks until it's very thinly traded. We got a massive gap up here, and what we may get is these gaps may have to get filled, right? This gap here may have to get filled, right? This gap pretty much has been filled. From here to here, it's already been filled. So that's pretty much going to be the Toyota play. So the risks are, you're dealing with a ticker that's not really heavily traded. You're dealing with an options chain that's very thin because you're dealing with a ticker that's not really heavily traded. So one of the biggest challenges is that even if you get the movement that you desire, it can be challenging to get out the way you want to get out at the speed in which you want to get out, because the options chain is really not that robust and you don't have a lot of open interest on the contracts, which means the spreads are really, really wide. The risk to the play is that, and let me go back to the 1 year, is that the downturn or the sell-off may have already taken place, right? So the sell-off may have already taken place from this 180 down to the 164. That's a big drop over 3 or 4 days. So the breakdown may already be done. However, the market may perceive this 40% drop in production as being really, really bearish news and may continue to sell this off. And so we may potentially can get a breakdown around this maybe 150 support, which is why it has a potential to fall around this support area here, which is where you get a lot of the support before it started really moving up. I don't know why it moved up this strong. I would have to research that. Why, the market became so bullish, especially from here, where it closed at 165 and then opened up at 171 and then gapped up again. But this thing trades really, really weird because it's not heavily traded. So its open and closing price sometimes is just totally, it's way off of what it closed or opened at the day before. So what we're seeing is that it's closing at one price, and for some reason it opens up at a totally not even close to the last price, which is weird. So the algos to me are kind of trading this kind of crazy, but it is what it is. So that's going to be the Toyota play. I may put the links to the particular articles in the description so you can kind of read those. But I would tell you to make sure that you manage your risk, because when you're dealing with tickers that aren't heavily traded, even if you get the movement that you desire, you can get stuck in the play because it's going to be hard to get out because there's not a lot of people in there with you. Now, one of the downsides of that is that you can wait for this open interest to get bigger, but it's going to also bring up the volatility. So you're going to have to pay more to get in the door, but you'll be more certain that it's other people in the door with you. You understand me? So if you wait till everybody gets over here, you're going to pay more to get in a position, but you'll be more certain, right, that you can get out of the play if you get the movement that you desire, because there's going to be more people on that options chain with you, but it's also going to bring up the volatility. Because what the market makers will do, if this thing keeps moving down and people keep moving into the play, the market makers will bring up the volatility, which will increase the price of the premiums. As long as people keep paying it, they'll keep bringing it up because their job is to create a market. And the way they create markets is as long as you keep paying, if we bring the price up, you keep paying, you bring the price up, we keep paying, we're going to keep bringing the price up. Why would we bring the price down if you continue to pay at a higher price? That's how markets function. So that's pretty much going to be the breakdown of Toyota. If you got any questions, hit me up in the comments. Like I said before, just make sure you manage your risk. This may not be the play for you. It may be the play for you, right? So, this is not an alerts channel, but what we try to do is get you to kind of understand fundamental and technical analysis, how they merge, because the market is driven by events, and those events and the demand and supply on the particular stock is represented on the chart. So there's a mix and a combination of both of them together. It's not one kind of canceling out the other. It's going to be David W. Williams, also known as Diamond Dave. Check out highest paid part-time job in the Road Options training program. Description is going to be in the link. Teach you how to be able to get money out of the markets, live the life that you desire, utilizing options, right? Essentially kind of like as a conduit to get the life that you desire. Can't guarantee anything. This is a space for people that want to apply themselves and actually have a desire to do the work. Talk to you later.